Good morning, students. So last class we discussed regarding the pricing approaches. Okay, we came to know from the buyer's perspective and seller's perspective. Okay, and also we saw some aspect regarding external factors affecting pricing, downward pressure, upward pressure, how they affect it. So today we will be studying regarding efficient markets and payment options and pricing strategies. So efficient markets. So our market is efficient when customers have equal access to information about products, price, and distribution. That we have studied these things in economics, managerial economics. Every data, each and every information is available with customers, and it's open to everyone regarding price, regarding product, and regarding distribution. Those markets are called efficient markets. So what happens exactly in efficient markets? So obviously, when market is efficient, you will be looking for lower prices, high price elasticity, because if someone increase the rate, so demand will fall it to zero. If someone reduce it, he will be in a loss. That he can't do that. So high price elasticity will be there. Frequent price changes happens in this market because of the more number of customers and more number of sellers also. Narrow price dispersion because of perfect competition. You cannot go very less and very high also. So these are the efficient markets. Now, efficient markets means loss of pricing control. How this happens? So there is a government control, there is a market control. In between them, the area of control for e-marketing pricing strategy. So here we know pure monopoly, oligopoly, monopolistic, and pure competition that we have already studied here. So what happens efficient market? We call it as perfect competition in economics. We have studied that how the loss will happen and there is a free entry and free exit. Okay, how pricing strategies are done, how prices are fixed, that we have all studied these aspects in our managerial economics. So moving further, is the internet an efficient market? Whether to check it or not. External market factor plays downward pressure on internet prices and contribute to efficiency. So we have seen efficient market because online you will find very less prices comparing to all, okay, when it compared to offline. And because of the huge competition nowadays in online, there are huge offers are also available. Just imagine in Bijapur itself, you are getting the what you call the services, especially you can say the food services or restaurant services, very discounted rate. Just imagine about the Bijapur district. Now you can imagine the how it's happening in the worldwide segment and how it is happening in the Indian segment. Okay. So I, now if you see shopping agents such as Rate, that is an agent like we have Flipkart and we have Amazon. Flash sales, you all know how flash sales have created a huge market, especially MI mobile phones, OnePlus mobile phones. You have seen this, but recent government has given some restriction on these aspect flash sales. There are some control over it. High price elasticity, you cannot charge much. If you charge much, people will not purchase. They will always 200, 300 discounts available. They will move there. Reverse auctions happens. There are some tax-free zones. Venture capital available. Competition is huge. Frequent price changes always happens. Okay. And there is a small price change increment also. So many people believe that in the internet is an efficient market because of access of information through corporate websites. We can access it anytime, anywhere, any places because huge whole information is available over there. Okay. So shopping agents are there, distribution channels are there. Okay. For example, if we say there are huge companies who are offering the third party level, you book the ticket from us, you will get this much of discount. You can book a hotel, you will get this much of discounts. So these are all happenings over there. Okay. So shopping agents also called, you can say comparison shopping agents. Last class I was discussing regarding this. There are insurance policies where you can compare. Okay. insurancebazaar.com, like that. Okay, they offer you how you can compare the prices of the technology also. Flash sales, that I told you, that limited time, 12 o'clock it starts, 12:15 it ends, but in 12 to 12:05 itself the whole stock will be unavailable. You have to sit and you have to put order for it. That you have all experienced in Amazon and Flipkart. High price elasticity, yes, the high price elasticity refers to the variability of purchase behavior which changes in the prices. More purchases happens, then obviously the demand start increasing and increasing. And there will be a limited time period offers. You all have seen this. Reverse auctions allow buyers to name their price and have sellers try to match the price. I would like to purchase on at this price, whether you are ready to sell it or not. Tax-free zones, most online retailing takes place across states lines. So buyers often pay no sales tax on purchase, reducing total out-of-pocket expenditure by as much as 5% to 8% per transaction. If the product is produced in the same state and the delivery is also in same place, so obviously the tax will be reduced. And venture capital, many internet companies are financed through venture capital or angel investor that we have discussed in planning. Okay, e-marketing planning. Many investors take a long-term view and are willing to sustain short-term losses to let those companies grow by establishing brand equity. Okay, so next, if we continue, the competition. The competition online is fierce and highly visible. Furthermore, some competitors are willing to set prices that return little or no short-term profits gained by brand equity and even brand market or market share, we can say. Next, frequent price changes. The online market experience more frequent price changes than the offline market because of how online things happens. And always you have observed that the frequency of changing prices 1 day, 2 day, within an hour, within a second, you have observed how prices frequently change online. Okay, small price change increments. So in one study, the smallest offline price changes was just like around $60, we can say, or not 60, you can say $30. And whereas the smallest online price change was rupees 0.01. So there are some price changes also happens, 50 rupees, 20 rupees, even you can get 199 shows. And most of you have the Telegram account. I think you have joined Telegram. There you have one called offers, Alibaba. So wherever the lowest price products are available, frequently you will be getting over there. You have to purchase within that particular period of time and you can get that offer also. So these are the situation which says the internet is an efficient market. Now, is the net an inefficient market? Okay. So the internet does not act like an efficient market with respect to narrow price dispersion for various reasons. Okay. Because branding and brand strength always there. You all prefer branding products. Okay. Woodland, if you are purchasing, and how it is helping. So because in spite of the glorification of products, a brand is still sought after benefits. Okay, the most highly recognized and preferred branded website get most of the traffic. Whichever brand is very high in name, that their traffic will be huge. Then comes the differentiation. Any brand is having pursued a real product differentiation, which enables marketer to price their product differently. Okay, that is how iPhone does. How product are priced online, that matters a lot. Okay, then online pricing, how they are pricing it in different way. Most of the goods are offered at fixed prices offline in industrialized nations. Okay, delivery options, the same product delivered under differing conditions may have considerably different value to the consumers also. For example, if you say a beer served at a bar has more value than one bought at supermarket, you know this because they are providing, I don't know, but I have came to know from my friends. that the beer which we purchase from the shopping mall will be the very less when compared to the taking it in a bar or some pubs. Okay, that is delivery options. Time sensitive shoppers. So time sensitive shoppers may not wish to invest the time and energy required to track down the best price. And there are some sites where complex that consumer need more time to navigate and complete the transaction. So wherever segment is very easy, there it is very, you can go and check it out. Switching cost. Customer face switching cost when they choose a different online retailer because you have some discounts, you have some credit points with you because of purchasing there. Suddenly, if you shift, you will be losing those points, and there isn't some cost also. Second generation shopping agents. So here it guides the consumer through the process of quantifying benefits and evaluating the value equation. So all go for the same thing. You always look for the, now counting the numbers, what benefits you are going to get, and you always want to check the value also at what time it, what price it is available. So even nowadays you can find refurbished products online also, which are used, we can say second hand, but they are also available at prices, but they will mention it, it is refurbished. Okay, and this is refurbished mobile phones are those mobile phones which are exchanged for purchasing new mobile phone. So those mobile are refurbished and again sold in online. Payment options. This is one of the biggest options, and you can say earlier you need to pay it from credit cards or this banking system, or you have to pay it from debit card. But nowadays you can pay it through phone pay, you can pay it through your Google Pay, you can pay it through Paytm. Okay, so electronic money uses the internet and computers to exchange payments electronically. So offline e-money payment system includes smart chips in cell phones and mobile wallets also that we are all using, especially even phone pay and all, they are all giving this. Okay, so offline e-money payment system include that I told you that these all things we have been using since recent times, mobile wallets and all. So for one-time payments, PayPal has become the industry standard with over 113 million accounts worldwide. So PayPal, you might be used, some of you, I have not used, might be someone of you have used this PayPal. Okay. Even Syndicate Bank used to give this option, PayPal options earlier. Now it is into Canara Bank. Okay. Now most of you use PhonePe also, most of you use Paytm also. PayPal account options, these are data, you can go and check it out. That is available with you in resources. So pricing strategy, price setting is full of contradictions and has become an art as much as science also, because you have to choose all the mathematical tool here. And you should get the profit also, you should get the customers also, you should be a market share people also. So how marketers apply in pricing strategy is important as how much they charge. Okay, so marketers can employ all traditional pricing strategies to the online environment. Okay, they are using, you have studied these pricing strategies in your economics classes. Okay, that was your third unit, you have studied this. Now fixed pricing, okay, occurs when seller set a price and buyer must take it for leave it, whatever, there is no negotiation, there are no offers. If it's in huge in demand, they will charge fixed pricing, everyone pays the same prices. So three common fixed pricing strategy. First comes the price leadership, you are the dominant person. Promotional pricing, you want to promote the product. Premium prices. So again, next is the dynamic pricing strategy. So dynamic pricing is the strategy of offering different prices to different customer at different locality. Airlines have long used dynamic pricing to price air travel. Frequent buyers, frequent movers, frequent travelers will get the huge discounts comparing to the new customers. That is how they go for it. Dynamic pricing can be initiated by the seller or buyer. There are two types: segmented pricing and price negotiation. So online also there are options available. You can negotiate price with it, or else they go for a segmenting, because I told you frequent mover from one place to another place, business people or traveler, always get the dynamic pricing strategy with them. Okay. Now, next, if you see the segmented pricing, so pricing level are set based on order size and timing based. So demand and supply levels or other factors also. So first of all, size, order size, how big it is, and second is the timing, at what particular time it is being purchased. So India has different occasion of purchasing and type of order also. So for example, if you are purchasing wholesale like indiamart.com, the order size matters. You can't purchase at lowest price. Okay, the timing comes when the seasonal happens. So demand and supply levels, yes, if there is a huge demand, the price will be high. If supply is huge, then the price will be less, or other factors. Becoming more common as firms collect more behavioral information also. So segmented pricing can be effective when the market is segmentable. You can differentiate the market. Pricing reflects value perception of the segment. Segment exhibit different demand behavior of the consumers. The cost of segmentation do not exceed revenue. Okay, and the firm must be careful not to upset the customers also. So these things have to be taken care when the segment pricing is being done. And the firm must be careful not to upset the customer is most important part, because once you upset, you discriminate, there will be a problem, or there will be a switching from company to company. The constant contact segment pricing. So you just an example, you can check it, how differentiate it is. Okay. So price month, how you free, you just 100 days free trial, 60 days free trial, 500 days you have to pay. And you can check this because you might have gone through this. If you're subscribing for 1 year, it will be very discounted. 6 month less discounted, 3 months less discounted, 1 month again very less discounted. Geographic segment pricing. So here, so geographical basis pricing segmentation happens, that we have discussed these things in IMC also. So company relate its pricing to regional or country factors, including competitive pressure, local cost, etc. Everything will be looked at. So pricing differs by geographic area wise, may vary by country to country, may reflect higher cost of transportation, tariffs, and margins. Okay. Yeah, the export charges, the duties, everything will be put on it due to the difference in country. If you can check, Karnataka tax is high compared to checking tax with other states. So there will be a price changes happens. Value segment pricing, the seller recognize that all customer provide value to the firm. So you have to check who actually do this. So Pareto principle says 80% of the firm's business comes from the top 20% of the customers. This is important for you. If you are planning for business in future, you should always look for these 20% of the people who can take your 80% of the business. If anybody business people are here, so they can directly tell this, because they know, yeah, these are my fixed customer, they say. They will not go to any other shops. They will come to us only. They will not shift anyone. They are the main who create 80% of the businesses. A firm's five-star customer contribute disproportionately to revenues and profits. He will be a loyal and regular customer. Customer value segment, this is how we do starring them, giving star ratings, 5-star, 4-star, 3-star, 2-star, and single star. So according to that, the customer valued. Okay. So fewest number of customer will be at 5-star, and largest number of the customer will be at 1-star. Next is negotiating pricing at auctions. So through negotiation, the price is set more than once in a back and forth discussion. Okay. So online auctions happen, such as eBay utilize negotiating pricing, where customer to customer market happens. Trust between buyers and seller is an important issue here. So eBay uses a feedback system to assist the buyer also. And there is a B2B auction, such as UBID, or an effective way to unload surplus inventory also. So you can auction them with the price and they can provide you. Okay. Price placement on a web page. Okay. So A and B, you can both the see. There is silver plan, gold plan, platinum plan, gold plan, silver plan. I think you all know this. You have come through this. Okay. There are customer of silver plan. and there are the gold plan and platinum plan. Okay, these are all services given on the basis of how they go for the plan. If they are choosing the highest plan, they will be given more discount to the customer also. So this is regarding today's topic. If you have any questions, you can ask.